Good morning, my people. Real, it's Tony in the house. Welcome, welcome. Guys, this morning, we're doing a quick one because I gotta rush off to meetings. So we're gonna get straight into the nitty gritty. Sorry. Morning, Brandon. It's been a minute, man. I haven't seen you. Hope you're doing great, brother. So, guys, let's first start with this Euro USD trade here. Finally, during the night, it hit TP2. It's been going slow, man. This was a slow ride up to TP1, and I was even on my way calling out. I was so close to call out an earlier close of TP1 here when we reached this level because I saw the rejection, but I stayed put, and we finally hit it. Went below, and I was like, shit, are we gonna drop from this again? But we went up. The thing is like this. When it comes to Euro, why I think it's going up on the long term and why we got to stay patient with it. It's because, as you guys know by now, when Dixie goes down, when the US dollar goes down, Euro goes up, right? Or Euro USD goes up as a pair. So, the thing now is there's a lot of fundamentals pushing the US dollar down, and on top of that, not only, just to mention one of the biggest fundamentals that is pushing the US dollar down is that a lot of central banks, a lot of countries are selling off their US government bonds. They're selling off the US dollars. They don't want to have US dollars anymore. People are losing trust in the US dollar, so the US dollar is about to fall even more. And people actually are, when I say people, I mean like regions, countries, because as you guys know, the world trade is done with US dollar. The US dollar is the world reserve currency. And when countries lose trust in the US dollar and don't want to hold it anymore, then there's more US dollars out there for supply, which pushes the value of US dollar down, of course, and causes hyperinflation. So everything that you want to buy with US dollar becomes very, very expensive. Now, it looks like the US dollar is about to face a hyperinflation because, as I said, countries are dumping the US dollar. And this is maybe also the reason, well, I think, not maybe, I think this is the reason that the US government and the Fed is now pushing the CBDC, the central bank digital currency, because they see the demise, they see the fall of the US dollar. They already knew this was coming. They're not stupid, and this is the way they can save the situation. All right, so that's that. But in the same time, that day when you will be forced to use CBDCs instead of US dollar, that's the day when you totally lose your privacy. Like everything you do will be monitored, even on social media, whatever. You do something wrong, they can deduct money from you directly. They can deduct CBDCs from you directly. They can fine you directly. They will. They monitor every expense you have and every penny you spend and everything. So you have no financial privacy anymore. All right. So with that said, that's the fundamentals pushing down the US dollar. Another fundamental that is important to know while we're on it is that 5% of all banks in the US are facing the same situation as SVB, Silicon Valley Bank. So we know by now about the Silicon Valley collapse, Silicon Valley Bank collapse. And what is happening now is that 5% of all banks in the US have exactly the same situation or even worse than Silicon Valley Bank. So, which means they have a lot of assets that actually are liabilities. It's U.S. government bonds, it's treasury bonds that that are worthless because the interest rate has gone up so much. So the yield that they're yielding is not worth it anymore. So they may be yielding 1.5%, while the interest rate is up at, I think it's 4.75% now, which means if I buy a US government bond now, I get much better yield on it than the previous ones. So they're losing money on them. Nobody wants these bonds. These bonds become worthless. So therefore, they're liabilities instead of assets in their treasury. And when that happens, what will happen is that you will see gold spike up like this, as we saw when Silicon Valley Bank collapsed, and you will see Bitcoin, crypto, spike up like this. So we are going to be ready on the sidelines to push in our money in the right place and do the right trades. All right. Last thing on the fundamentals to keep an eye on Friday, we have red folders for US and for Canada. Canada is the GDP reading, so they will come out with the GDP rate basically, and what's expected is 0.4%. When it comes to US, we have the core PCE price index reading expected 0.4%. So this here can turn around, cause a lot of volatility in the markets. So be ready for that. What does it say? Actually greater than forecast is good for currency. So if it's better, if it comes up better than 0.4%, you'll see the US dollar go up, which means, of course, probably gold will go down, Euro USD will, of course, go down. Other currency pairs paired against the US dollar will go down. All right, that's that. Short brief on the fundamentals. Now, a short recap from yesterday. We have this Euro USD trade in profit. Let's go down to a lower time frame. In profit, we just hit TP2. So congratulations to that move. If anybody from my Telegram channel is on this trade and still in it, move move stop loss to break even. So you have now a secure trade and profit. Congratulations. We are looking for this to continue. I'm looking for this to easily hit 1.084-ish, 420 maybe. And at least here we might see some rejection before we continue up, if we continue up, if we don't bounce down again. But this is like at least what I'm seeing us hitting. So TP2 will be done today. TP3. TP2 is already done. With that said, and we might maybe look for a projection on where we're going on the long term. So the first level I'm looking for us to hit is this supply zone here. You see this red zone here. That's about 110 pips from where we are now. So that's 110 pips from where we are now. We are right now in 35 pips in profit. And I see the price is pushing up right now, so hopefully we hit TP3 while we streaming this. Okay, recap on Euro USD, short recap on gold also, our favorite pair, because in this channel and in the Telegram channel, there's no pair that we have made so much money on, caught so many pips on as gold. And yesterday, and by the way, if you're not in the Telegram channel, link is in the description box below. Make sure you join it. That's where I call out all the trade ideas, update on trades and everything. Yesterday we entered. When did we enter? We entered here at about 172. I called the sell limit. I think it was 1973. I called the sell limit. Yeah, now I remember 1973. But then I alerted. I made a trade alert on this one, and I told you guys to sell now. And that was at 1972 and 1972 5-ish, because I saw that it was about to reverse. It was giving sign of reverse, and from there to when I told you guys that I'm taking my TP4, we caught 240 pips. 240 pips in the bag yesterday. That was yesterday. What are we doing today? So today, first off, we want to do this. We want to understand where we are right now with this. What happened yesterday after, and we sold off perfectly actually, because what happened was we came down when I told you guys to close your positions, or when I said that I'm closing my position, and I recommend the same. After that, we bounced up and been chopping around here, playing around a little bit, and now we're actually moving back down again. So let's see what's going on. We have let's look at this for a minute. Let's grab a picture of what's going on right now. All right, so what's happening right now is this. The fact is, it ain't much happening right now with gold. It's kind of stalling, but let's see what we're looking for. So first and foremost, we have the sweet spot zone here. We have the demand zone down here of the last big push, just so you understand, so you get the picture of what I'm talking about. So from this swing that have been going on since March 2022, we have this big drop here. We pull Fibonacci from this top to this bottom, gives us these thick lines, these levels, and it gives us kind of a direction of where we are at the bigger time frame. Now from that, we take this last big swing up that we had, pull fib, make the lines a little bit different, like that. One with these ones even thicker. Boom, like that, so we can distinguish them. A lot of lines, but I'm gonna try to keep you guys on the right page so you don't get confused with this. All right, so let's do it like this. Okay, cool. So the really fat lines are the big drop that I was talking about from March 2022. And now this last big push that we had, it started when? March 2023. So this year, and ended the last week when we would try to break through the 2000 price level. When we pull Fibonacci on this last sequence, we get these lines, these little bit thinner lines. And what we see then is that market came back down and retraced perfectly to the 38.2 Fibonacci retracement, and then faced the 23.6 Fibonacci retracement as resistance. So it's been playing around here, but it's been respecting these levels. All right. So right now it's dropping off the 23.6 Fibonacci retracement as resistance. It's dropping off there. Now remove these fibs so we get a clearer picture here, and then we look into this. All right. So then what has happened most recently? Then we pull fib again on this last push from this bottom to this top, and then we see that market came down. And this is why I put the level here. So for you guys that have been asking about my trading strategy, why did I put the last TP down here? I put it here because this is the demand zone. This is the 78.6 to the 88.6 Fibonacci retracement level. I use that as a rough demand zone level, and as you guys see, the market respects it very well. So it came down here, tried to push through, didn't manage to do it, and bounced off again. Came back up to the sweet spot, these yellow lines here, and now it's pushing down again. Now we're zooming in even more. And what we're looking at now is this little swing here. So when we came down to the sweet spot at about 1944 price level, we bounced off here, came up to the demand zone, came up to the sweet spot and are dropping again. If we pull Fibonacci from this little sequence here, we have these dotted lines. That's the dotted lines that you see here. What has happened? Market came down to the sweet spot of this little sequence and is basically facing support there now. So we might actually see the market respect this as support, come back up to test this as resistance. So for me, in this case, I don't see any trade here. Why is that? It's because of this. And I'm going to explain this. We have broken through the 20-day EMA. We are below it. And the structure, what we see here going on is market pushing against this support. So we have support against the 50% Fibonacci retracement of the little swing that we just had, the little push yesterday. And that 50% Fibonacci retracement, this sweet spot here, is functioning as support right now. But we have support where we bounce off, boom. In this case here, it looks for me like the market wants to drop. Why is that? Because it's pushing, it's pushing, it's pushing, it's pushing. And you see these wicks, these wicks shows that there's a big imbalance between buyers and sellers. And as you guys see, it's trying to push down. So we ain't taking no chances when I'm trading, at least, and we are not jumping into something where we're not clear, where there's no clear direction. So in this case here, what we do is we either wait for the bounce up, we're taking a sell from here. If it looks like a sell, then we're taking a sell from here, or we're waiting to see how the market is gonna behave inside the sweet spot zone, because even if it breaks in, it's gonna chop around here. So we want to see how it behaves here, if it does a breakout in either direction. All right, so no trade for gold right now. With that said, let's go to Bitcoin. And guys, stop me if I'm moving too fast forward. I'm trying to be quick with this because I want to cover as much as possible before we end the stream, because there's a lot to talk about. Now we're going into Bitcoin. Looking at what's going on in the crypto market. So we have, if y'all that have been on the stream, y'all very familiar with this channel and the little channel inside that channel. We have broken above this trend line. So this trend line here, we are broken above it. But in the same time, you see this orange zone here. This orange zone is a major key resistance or support zone. I'm gonna show you guys what I mean with it. So look at it. Look at this. I showed you guys yesterday. This is the orange zone. Now look how nicely market respects it before it broke through. So we are underneath it. We have broken through. We are underneath it. We are facing it as resistance right now. We came down to this big demand zone, pushed up, and we are facing resistance toward with the sweet spot zone here as resistance. And it, as you see, the sweet spot zone, the 61.8 Fibonacci retracement of the last bull rally conflues perfectly with this key support and resistance. Now, we zooming in again to see what's going on right now. And I spoke on the fundamentals. So if we see more banks collapse, then you will see this thing push up. You will see this thing pump. All right. But before it does so, I can easily see, because we have come up now, we are squeezed against this resistance here, and we have a support against this trend line here. Let me zoom in so see what I mean. This is the the key zone I was talking about, the orange support resistance zone, right? And here, what do we have? We have this trend line. So we were squeezed against it yesterday, and you see, like it was trying to drop below, picked up some liquidity, and was trying to push up again, break through, but didn't manage. It just wicked through, came back down again. So the sellers were too strong. There's too much sell orders going on right here. And yesterday we had this drop. We dropped down. We dropped out of this what is it called? Inclining triangle. I'm not very good at names of patterns, but you'll see what it is. Not important anymore. Let's remove that. So we dropped out of this inclining triangle, and yeah, we face some real resistance. So what will happen now? Well, right now, to be honest, I don't know what will happen, but what I think on the bigger picture, what will happen is we will come back, test this trend here. Why do I think that? Because we have this swing from this bottom to this top. And here we have the demand zone of the swing. And here we have the sweet spot. Sweet spot, we already came and dipped our fingers in it, picked up some liquidity, but I think we're coming down again. Why is that? Because here is a lot of liquidity. We need to clear some of that liquidity. We need to fill some of these orders. But as you guys know by now, it's very seldom that you will see Bitcoin price come down and like turn around in between these two zones. So it either comes down here, test the bottom of that zone, or it comes down here, test the bottom of this zone. I actually think we're coming down all the way here. If no news is going to push it up now. We might even come down much further than that because we have a lot of liquidity here to fill. All right. If we start dropping, I'm going to call that sell, but I'm going to call that sell after I see some confirmation. So I want to see some confirmations first that there's a drop going on, that there's a bigger drawback going on in the markets. And when that happens, I will call it out. So right now we are in a no trade zone. This is a no trade zone here. We are between levels, and we need to see market move and show some confirmations in either direction so we can jump into a trade. So with that said, there's no live trades today this morning. Stay tuned to the Telegram channel. I will call out trades as soon as I see it. Right now, nothing. Euro USD has it hit TP3 yet? No, still struggling with it. Trying to break through this resistance here. If it does, TP3 is next. So stay tuned to the channel. I will call out the trades when I see them. Right now, nothing. As I always say, quality before quantity. We are not here to take as many trades as possible. We are here to take good quality trades, make good bags, make some good pips, and go to bed with a smile. All right, and wake up with a smile. That's what we do. What confirmations you're looking for exactly? All right, so good question, Brandon. I'm gonna go through it very quick because I need to end the stream actually. But for y'all that wonder, stay tuned. So let's go to gold. Let's go to gold because gold is the one that I see closest to a trade happening. So confirmations I'm looking for is co-influence, Brandon. So this one I don't talk too much about them because I don't want to like overwhelm you with information. I have done